Thank you very much, everybody. Panel members here have flown in from Dublin and from California, from Mayfair and from London Bridge. So, you know, there's quite the cross-section amongst that. And our topic is foreign exchange. And again, to sort of be all warm and fuzzy, shall we begin with a foreign exchange where if you reach into your pocket and take out one of these, which I'm sure you've got, which is your business card, and give it to the person next to you and demand that you get one back in exchange. Come on, pass them out. Cards, please. Thank you. That is half the reason for being here. Yeah.
This is exactly foreign exchange of business cards.
All right, that was easy, wasn't it? Right. So, large part of these events is about meeting each other. And so I have my notes here in my little red book. The rest of you have little red books. For those of you old enough to remember communism, it gave you all the rules to live by of what you were supposed to and were not supposed to do. Now, FinTech, I think, is a very good example of breaking those kinds of rules. And this is the difficulty that the four of us have every single day, and every other FinTech in the room, of trying to create something new and different. It's normally faster, it's cheaper, it's more efficient, it's 10 times better than what the existing system is. Doesn't matter what it is, it's something in the financial markets or financial services. It's old, it's slow, it's expensive, it's not necessarily built to task anymore. But there are difficulties in bringing new FinTech things to market, and those are some of the things we'll talk about today. We also have the other element here where we all have an acronym. So we have M3, FXCH, OTCXN, it's a tricky one, and R5. But if we start just on the end there, if you just give us a quick rundown on 2 seconds on what M3 is.
No problem. So M3 is actually MoneyMailMe, which is a mobile app. It's actually a social money app, which allows users to benefit from secure encrypted chat functionality, video calls, but also, crucially, the ability to send money and receive money cross-border internationally instantly, in a nutshell.
Brilliant.
Yes, good morning. FXCH is a clearinghouse for foreign exchange. In FX, banks are trading with one another and making settlements. After the trade is done, you need to make payments between the banks. And until now, only banks trust banks, and therefore it's a very, very closed world. So we've attempted to break this and actually allow any financial institution to trade and clear FX against one another.
And OTCXN is basically a peer-to-peer trading network for institutional FX trading. Again, the idea is to let anybody trade with anybody else without having dependency on credit lines from tier 1 prime brokers. So we're essentially solving that. The value proposition is solving that access problem that exists today in the institutional FX space. And we're also a blockchain company generally with a use case agnostic fabric that we offer out for enterprise.
Great, okay. And so R5, emerging marketplace for local currency trading. So that's the difficult places, China, Brazil, Russia, India, places that have restricted currencies for the primary market. But as you see across there, we've got sort of a blend of more retail focus, the difficult parts of the marketplace, and clearinghouses and clearing of trades, which is about as dusty and as old a sort of part of the marketplace as you can possibly find, which, of course, at the same time means it's ripe for disruption and for change. But there's a lot of difficulties with getting those sorts of things done. And often, so the term FinTech, the tech bit is easy, the fin bit is the tricky bit. That's the hard part in terms of pushing either incumbent institutions to change, which is a lot harder than perhaps the person in the street, or is it? So maybe if we kick off with just sort of, in terms of the challenges, in terms of getting people to use a new clearinghouse model or a new blockchain model to clear trades, How hard is that? What are the main hurdles for that as a fintech company trying to break through that?
Well, I think the good news is, at least from our perspective, is that pretty much every bank that we talk to these days is building out some kind of a blockchain initiative. And so there's a growing comfort level. I think there's even more than people realize going on behind the scenes. And so there is a growing comfort level there. I think the challenge is, really adding value by doing something end-to-end. So in our case, looking at the whole trade to settlement life cycle as opposed to just something that is maybe a cost reduction exercise or a bolt-on that is a very discrete point solution, doing something that's much more ambitious that really moves the needle for all the participants.
So that really is revolutionizing it, right? Completely turning it upside down on its head. Frank, do you agree with that? I mean,
Very much so, yes. In fact, actually, the market has been slowed down. It's moving at a glacial pace in the capital markets for change. But it's even worse in the last few years because of new regulation coming on board. The banks have a lot of things to take on and a lot of projects that are slowing them down. They can't really spend a lot of time and energy on new projects. So what you see in the C2C world, where actually large financial institutions just purchase a newcomer that has actually created and done something because it's easier. The same happens as well in the institutional market, where the banks and the main participants don't have time to innovate. So it's our job basically to innovate, show them the benefits, and basically let them in when the right moment.
why aren't banks innovating, do you think? I mean, I've got a view, but I'd be intrigued on yours.
Well, I think the staff reductions have made all desks in banks extremely busy. Yeah. They're doing basically a job with 90% staffing when they would need 100, and therefore there is no time to innovate, no time to think out of the box.
It's not really their core function either. You know,
not anymore.
I think these days, though, it's, you know, at least from what we see with all the different innovation labs and the folks that we're meeting, we see sort of a sea change in maybe the right direction.
I mean, even this event itself, when Luis was talking about it before, it started, well, I remember the one at Barclays Accelerator, which was just down the road, if it's still there, which opened a big hoopla of like, yeah, you know, banks are going to do accelerators and going to create all kinds of things, but it did tend to not quite disappear, but focus into very particular areas very quickly, which was essentially, as you'd expect, anything that's naturally useful for the bank itself. And there were very few, a lot of consumer-faced stuff, and a lot of, you know, the word fintech is very consumer-based. You know, we're talking here about sort of more building blocks of the primary market itself. Mark, in your service, which is far more to the man in the street, and a bit of a blend of messaging and payments, which is a great new thing, and I don't think anybody else is doing that over here, which is an even better thing. Yeah. How about the challenges of getting people to pick it up and to start to use it and come back to it for foreign exchange payments?
Look, I think yeah, uptake has been pretty good. The app kind of speaks for itself and stands for itself, but right now I think, you know, in order to grow our active user base, we're kind of looking at how that social money aspect can be combined into actual business functions. Yeah, and that might be yeah, expense management, it might be payroll, it might be a whole bunch of stuff that's exciting and interesting. But like all sort of fintech ecosystems, once you start to have a user base and once people start sharing money and sharing experiences, that population kind of snowballs and gains a sort of critical mass, and the network effect kind of takes over and becomes really interesting. I think I was reading some research the other day, you know, sort of that generation, 18 to 25-year-old, sort of often sort of, you know, share about £10 between their friends. And they don't see that. 1 in 5 of those people don't see that as meriting or worthy of doing a bank-to-bank transfer. And that's where I think we can pick up. And once we start gaining traction in that space, I think the next generation, the younger generation, will decide what peer-to-peer transfers and what money transfers looks and feels like going forward.
What's harder? Is it uncovering the customer or convincing the customer to use it more?
Well, that's a good question. I think convincing the customer to use it more is quite self-supporting. Getting the customer to use us first and to sort of trust technology in a non-bank is probably the hardest step as an initial starting point. But once they're there and once they use it, the network effect is actually quite strong.
I'm sure that Rosario would agree. It's exactly the same in the institutional market.
Yeah.
It's basically convincing to try and use it first, but the benefits are immediately obvious. I mean, cost, simplicity, workflow, everything is self-explanatory.
Yeah, and I think from our point of view, you have to, there's kind of two key elements. You got to really be sure to incentivize all the parties in the right way. I mean, you can't just, I think, and this is maybe more of a Silicon Valley problem. There's a lot less domain expertise, particularly around capital markets and FX. So a lot of the folks that have built products that are aimed at FX are largely oriented around payments, and they're familiar with payments. That's where PayPal's from. That's where all these payments companies are from. A lot of investment in that space. And I think there's a lack of domain expertise, and so I think they maybe have never sold into a major financial institution and had the arguments about, you know, even 7 years ago, I remember arguing, you know, with a major firm about whether or not they were going to allow Linux to run because it was open source. You know, it wasn't that long ago, so there's a lot of challenges there. So you got to incentivize people the right way and do the work for them, really.
So does that mean that people in the city here that have just been laid off from a bank should get on a plane, go straight to California, you know, head west? Or should we be expecting more California-based American companies popping up in London, do you think? Because you're right, that would be a very wide open opportunity, I would have thought.
I think there's a lot of stuff coming outside. At least when I think about non-payments, FX trading, like true capital markets type trading, most of that innovation is not coming out of Silicon Valley.
Yeah, I think there's a pendulum. In the last 6 years, I think this show was started. All the focus was on C2C, and a lot of companies received a lot of investment to actually make new foray in these markets. But there is a realization right now, especially in Silicon Valley, that capital markets, in fact, has a different scale. We're talking an order of magnitude that's completely different. So you can sell very small amounts of FX transactions to millions of people. Like, for example, TransferWise, they have 1 million plus customers, but their average trade is £1,300 or something like this. When, let's say, the number one FX platform in capital markets is doing 275 billion per day, that's more than 1,000 times more than TransferWise. And the average transaction is also 1,000 times bigger, which is 1.3 million. So basically, the focus that was on C2C only is now starting to rebalance, and people see that in capital markets there are also amazing opportunity by using and leveraging technology like blockchain or our payment system, new payment system. And I think that's changing right now.
I mean, I think TransferWise is one that's held up as a big example, right, of success, and they certainly, I think they raised a lot of money, and they're very, very high profile in the street, and it's a very good service, so you use it myself. But at the same time, I think it's important perhaps for people to realize that they don't really actually do any FX transactions at all. All they're doing is they run 2 accounts in 2 different countries and pay in and pay out of that account. I imagine it's extremely rare that they ever actually do any FX transactions in the middle. The only day they'll ever do that is if they've got what's called one-way risk, which is for one day, for some reason, everybody's a buyer or everybody's a seller. But most of the time, there's no actual transactions going on in there in the middle. And that's something we've been looking at actually for China, where there are restrictions about shifting money in and out of the country, but you can effectively provide a foreign exchange service by just running 2 accounts right next to each other. So I mean, there's an example of a retail service that had a new model which is kind of what a bank does, that has uses, again, for all sorts of international marketplaces under a fintech umbrella. And I think for a long time, particularly in the professional space, the retail guys are the ones that come up with all the sexy new innovations and the great new stuff for trading, and it gets tested there, and then often comes into the professional market or into the one with a few more zeros on the end of it. I mean, and sort of everybody borrowing and stealing perhaps from other successful models and putting that into their own world. Digital ledger and blockchain and the rest of it gets a lot of talk, but I think it's hard to find real life uses for it within financial markets. It's a good one to talk about, but both of you guys are doing that, right? You're finding a real use and have live customers actually using the thing in terms of confirming transactions or moving them forward. How's that been? What's the sort of hurdles with that? What's the customer feedback on that? I know it's still quite early, but is it a problem looking for a solution, or is it a solution looking for a problem?
Well, speaking for us, I would say that we wouldn't be able to do what we're doing without blockchain, actually, because there's people that are using it very naively just for recordation of data, sort of golden source of data, and it's very useful for that, of course. But for us, it allows us to sort of cross those trust boundaries to bring value that's tokenized by giving software to banks that are holding cash collateral or other collateral, tokenizing that value, allowing that to be issued into the network and be used as collateral to support trading activity within the network. That means that we don't have to behave like or look like another trusted intermediary that would be holding or controlling counterparty's capital, which is
model,
yeah,
right?
which is
a clearinghouse that has a lot of money somewhere, and that's the traditional model of.
Well, that's the prime of prime model. It's worse than that at the interbank level, right? Because then you need tier one prime brokerage, and I mean we're meeting with clients that are, known quantities that are run multi-billion-dollar funds that are running hundreds of millions of dollars that still can't get tier one prime brokerage and are, using tier two credit intermediaries to access the wholesale market. So our vision of the world is basically, everybody sitting around a wheel. There's collateral that's on the network and it supports their trading activity. You can still use leverage. You can hang payments and cross-border payments and things like that, exchange for physical off the back of it. And blockchain really is what makes that possible. It's not just about recording data, although it is, very useful. And we're doing some interesting things, recording even fixed message sequences and things like that on blockchain, which has been pretty interesting.
Frank, the trust is the big thing, though, right? It's sort of trust and security. That, okay, my payments will all go through, I don't have any concerns or worries. That's the reason why a large amount of money in an account somewhere in the world is the traditional model. How do you continue that trust model as a fintech, as a small company?
That's precisely the continuation of your previous question. Could we do things without the blockchain? Of course we could. But it changes everything. The blockchain is, as was on the cover of The Economist, the trust machine. So as a company, we've done this business for 9 years, settling trades for FX companies, but obviously always had to back ourselves with a bank because only banks trust banks. With the blockchain, we use technology to actually give trust in the model so that people know exactly what where their assets are and what we're doing with their assets. It's basically the same as Rosario. We are digitizing the assets of the members, and that means that basically they can trust that we are only manipulating a ledger and not moving their cash around. So once you understand that it really brings something in addition to the normal business model, people suddenly open their eyes and say, oh yes, that's actually very different, and that's completely revolutionizing. It's making it totally democratic, and now we can have small firms dealing with very large firms, which was not the case before. So
I think that's the key, though, isn't it? Because that's where the traditional credit model in the marketplace falls down. The little guy can't really trade with the big guy.
Absolutely. Capital markets is a very restrictive world, and we are breaking it up and we're making it more democratic by actually using tools that are giving trust for everyone to trust everyone else.
Is democracy a good thing, though? You know, if the little guy with the system in Cyprus can beat the daylights out of Citibank in New York, you know, and that's happened plenty of times, is democratization, the allowing of the little guy, a good idea?
What? What do you think?
Yeah.
I think it's good across the board, no matter how you look at it, right? So if you look at it from the current model, the credit-based model, you know, prime brokerage model, there's just enormous concentration of risk. Any way you slice it, even if you're a billion-dollar hedge fund, you know, you have to have 2 or 3 prime brokers. You can't even rely on having one, because the nature of the legal framework is that they can call you up and say, we just shut you off 10 minutes ago. You know, that's a problem. Then all the way down
The guy you were saying yesterday who had 100 million in an account but still couldn't open a prime brokerage account.
And all the way down to the little guy, you know, I mean, what's better, to wire your money to some brokerage and have it not even in segregated funds, or to have it in your bank account reserved for your trading activity on some network, right? So I think it is good, and I think it spreads the risks around, and I think it actually reduces risks pretty much no matter where you sit in the ecosystem. And if you're real money, if you're corporate, if you're sending your trades up to a custodian, you know, we all know what that looks like, right? So you know, I mean, in Silicon Valley, we see all the funding of all these companies to do cross-border payments, and they all run around telling everybody their service is free because people don't understand spreads, and they don't have a true central reference rate, because we have something without a central exchange, unlike equities. And, you know, they're paying 2-3+% really on the value transfer. And so that, you know, these are things that will go away with the networks of the future, these peer-to-peer networks, where there's a lot more transparency.
I think we've all, or hopefully we've all noticed that the price in the departures lounge at the Bureau de Change is very different to the price in the arrivals lounge when you're at the airport. Make note of that if you haven't, because you are being horribly ripped off by that. So if 25 minutes goes by very, very quick. It's a very big subject, not a lot of time. If anybody has a question, raise your hand. But we'll move. Oh, we have one. Blimey, how about that? If we can get a mic over to the chap in the blue shirt there. While we're doing that, in your model, in the M3, do people? It is everybody's making payments to each other. It is actually individuals paying each other. There's no sort of bank or institution in the middle there at all.
No, there is an institution in the middle. We're currently partnered with a company called MangoPay, who facilitate the payments on our behalf.
Because often that's what happens, isn't it? Like even with the Zopa model or the rest of it, you know, the peer-to-peer models, it does indeed start with individuals, but very quickly institutional money finds out about it and thinks this is good return I can get here if the risk parameters suit me. And more you find it is actually one big money provider in there that takes that over, which kind of disrupts the all-to-all model in its own right, actually.
Yeah, I think, you know, for us, what we were focused on what's important is there's a huge amount of money that's sent, you know, internationally cross-border every year. I think in 2015 it was estimated at almost $700 billion, and you know, typically these are quite low value, to your point earlier, and you know, doing that in a cost-effective, easy way is really quite challenging. It might require you to go to a specific location. It might require queuing. It certainly required expensive fees and transaction charges and FX rates. And we're sort of interested in the use of mobile technology and how we can make that simple and cheap and transparent. And yes, even with a strategic partner, I don't think we necessarily need to be completely independent. I think the strength of fintech and the ability to survive and grow will depend on collaboration or fintegration, if you want to call it that.
Oh, I like that one, fintegration, right, okay.
Yeah, I think that's where actually democratization works. If you're doing C2C, you need to actually back yourself with the capital markets. And if you're doing capital markets, you're very interested to see the flow of the retail traders as well. I mean, it's the more diverse the crowd that is trading foreign exchange, the more interesting for the participant.
I agree. So we have our man with a question?
Yeah, sorry. I was very much looking forward to this panel for this week because my background's in capital markets, and I just started with a firm in Silicon Valley. So to say there's a huge difference between San Francisco and New York is a mild understatement. I like what Frank had said, that banks trust banks, because it couldn't be more true. And in Silicon Valley, they want to send people to Mars. So, you know, you're talking about just two different mindsets. From day one, I've often said we should steal a script from Wall Street, in that they never called them junk bonds, they were high yield bonds, because banks like to do the selling, not to be sold to. So if we can all stop using the word cryptocurrency, it actually sounds illegal, because, you know, the same way there's a foreign exchange, really what you're talking about is a digital exchange. And I've often wanted for someone, and it could be a question for a lawyer, but to say the FX market is unregulated is probably a stretch, because the banks effectively rigged LIBOR and rigged the FX rate, and now they're paying for that, literally. And so it's amazing, it's an amazing time, but I kind of wanted your opinions on how do you get the big banks to start looking at trading in these digital assets? Because right now, there's a lot of talk about blockchain and DLT and what it can do, and the banks are interested in that. You bring up actually trading a digital currency, and they don't want to hear it. And I think as an industry, in order to grow this, that has to change. So because this is the FX panel, and I'd like to say that they're DX, they're digital assets, how would you go about doing that and changing kind of the perception and get people to start taking it more seriously and actually getting involved in trading in these assets?
I would say it's partly a nomenclature problem, right? Because cryptocurrencies are digital assets, but tokenized real assets are also digital assets. And banks are certainly not shying away from trading digitized real assets. You know, you see the CME doing that with the Royal Mint here. You know, that's going to be the future. So I think.
The CME and the Royal Mint. You mean the deal with BitGo?
I don't know who else is involved in it, but they're basically, it's digitized gold holdings that you can trade, and I mean that's definitely the future. And for example, what we're doing, the initial way that we're supporting collateral coming into the network is digitization of fiat that's just on deposit at a given bank. And so that'll extend into all other asset classes ultimately. And I don't think banks are afraid of that. I think the banks that we're talking to are all working on that. I mean, look at firms like BNY Mellon and what they're doing with that utility settlement coin and the central banks, and in partnership with UBS and a number of others. And it's happening all over the place.
Yeah, no, I would agree with that. I do know of that deal of the CME and the Royal Mint, and that's the kind of thing, that's the kind of product set that I think gets people to change their mind when it becomes actually, it's Her Majesty's gold, and it's being digitized and traded on the CME, the world's largest exchange. I think that gets people's attention.
So I think there's another panel actually specifically on cryptocurrency. It's somewhere in the timetable. Do we have time for another question, or that's okay? Wrapping it up, right? So there you go. Yeah, big subject. 25 minutes, not a long time. Naturally, any of the panelists here, I'm sure, will be glad to take any questions that you have about foreign exchange and fintech and the rest of it. Please do come up to them. It's just up to me to thank my panel very much. Thank you.
All right. Thanks, John.